Now let's dive into our featured story of the day, and let's discuss Bitcoin hitting $460,000 per coin, which is the true hash adjusted price right now, according to the hash rate, which continues to break out, reaching new all-time highs, as per the high priest himself, Max Keiser. So here's the latest tweets in which he shared. And also, I appreciate all the love in the chat. Keep pumping the likes to help pump the stream. And let's moon, shall we? But here we go. Here's the latest from Max. He tweeted here, the only Bitcoin measure that matters, the only one that I track, just hit another new high in its 15-year bull market run. Now, I want to stop there and just discuss this. Now, he says we're in a 15-year bull market run. Why is that? Because if you zoom out on the charts, you can see it's a 15-year bull market run. The hash adjusted price for Bitcoin now is approximately $460,000 per coin. This was off the back 3 days ago, January 13th, when Bitcoin surpassed 532 exahashes per second. Let me correct myself. 532 quintillion exahashes per second, as per this chart, which is off the charts. Now, this morning, we reached yet another all-time high. So now the hash adjusted price may even be closer to 480,000, just FYI. But let's check out some other tweets I shared here. 460,000 Bitcoin, let's freaking go. I know Max retweeted it. It was blowing up, got over 25,000 views. And he shares here 22 hours ago. Look at the hash, not the price. The hash precedes the price. And look at that chart. Holy moly, it's just doing its thing. I think in 2024, 2025, it'll continue doing what it does best, reaching new all-time highs and becoming more and more secure, and it's already the most secure network in the world, family. Now, he also wrote here, this guy, who is actually the CEO of Vanguard, he said this guy delayed Bitcoin hitting 50,000 post-ETFs by 2 weeks, which ultimately means we would have hit 50,000. You know, we stopped short at around 49,000 and corrected. And that's due to a lot of the mainstream FUD, such as Vanguard saying, we don't believe in Bitcoin. It goes against our ethics and ethos, which is ultimately saying we don't believe in freedom and sovereignty and we want no part of it. But guess what? Want to know how shady these mofos are and why you can't trust them? They own roughly 8.6% of MicroStrategy. So they have indirect exposure to Bitcoin Vanguard. And I know this because the other day, it may have been on yesterday's podcast live, we went through all the primary shareholders of MicroStrategy. And guess who's at the top? Vanguard. You can't make the ish up. BlackRock is number 3, just FYI. Now, also, he tweeted here, number 1, the government seizes the ETF for national security, ultimately saying, I don't trust these Bitcoin ETFs and the collusion between the regulators and Wall Street. They have some sinister plans and tricks up their sleeve. He also says, number 2, before they send you your USD, which is how it works, you'll get the US dollar, if not the CBDC equivalent to the Bitcoin, while they keep your Bitcoin. Number 3, price moves up 100 Gs. Number 4, you pay tax on the gain from the payout with what is left. You buy Bitcoin at a price 100,000 higher. Number 5, price crashes. Number 6, you are now sitting at a net losing position from where you started. Ultimately saying, don't trust these mofos with your Bitcoin, not your keys, not your coins. He also says here, you are not protected against government seizure, and the U.S. government plans to seize all the Bitcoin ETF Bitcoin in the interest of national security. Let me know if you agree or disagree with that sentiment. I did a whole show specifically on that topic. Now, quoting him here, how he really feels about BlackRock. I transcribed this 42-second interview. I posted it, and here's what he says. BlackRock is terrible. They are one of the worst players on Wall Street. Now they're completely without morals whatsoever. Their business model is just repackaging stocks and selling them as ETFs. Their ETFs own more stocks than there are stocks, and they charge a fee for that and have incredible political influence they use to make it easier for them to game the system. They are really a plague on capitalism. Tell them, Max. And a really good clip here, I highly recommend you guys check out after the show. It just dissects the collusion and corruption going on with the world elites and what they have these tricks up their sleeves. Now, he also wrote here, this was back on December 3rd, so last month, the God candle, a $100,000 uptick in Bitcoin is in play. It'll shift the global axis of wealth and power in a single tick. And these were the rumors surrounding Qatar. Quoting him again, 2 days later, I have one word for you, 100,000 Bitcoin God candle fans, Qatar. The rumors are getting very loud on this. Their sovereign wealth fund is rumored to be looking to buy $500 billion worth of BTC. You can see their president, or I guess Amir, who is ultimately the prince of their country, meeting up with Bukele over in El Salvador. And he also shared an update to add clarity. My source said, Bitcoin makes our $500 billion sovereign wealth fund effectively worthless. We should just convert all of it into Bitcoin. Now imagine if they actually did that. Holy moly, Bitcoin's market cap would virtually double overnight. However, it's probably impossible to buy that much Bitcoin, but that may be their goal. And when do you think they're likely to start buying, or have they already behind the scenes and haven't announced it? What are your thoughts, family? Another headline, Qatar's sovereign wealth fund dives into Bitcoin with potential $500 billion investment. And this was the story, Max talking about the God candle, etc. But what I want to dive into now is actually the latest interview from Max Keiser, which was just released a couple of days ago. The title from Wired Magazine is Why Crypto Ideologues Won't Touch Bitcoin ETFs and Why Purists Will Steer Clear. That's right, because we don't trust this stuff. Now, they actually interviewed Max, and I read that interview verbatim, word for word, so I'm just going to read you some of the highlights from this article. On January 10th, after the farcical false start, the US SEC approved the launch of the spot Bitcoin ETF in the country. The ETFs will be issued by a selection of the big name financial institutions, which we all know, BlackRock, Fidelity, Franklin Templeton, giving people a way to invest into Bitcoin through a brokerage as if it were a stock. The price of the ETF shares will follow the Bitcoin price. The arrival of the new ETFs have been broadly celebrated by Bitcoin investors who believe they will legitimize the asset in the eyes of wealthy institutional investors and make it easier for the lay people to invest, thereby broadening demand and driving up the price. The inconvenient catch is that the spot ETFs are at odds with practically everything Bitcoin is supposed to stand for. That's right. In the 2008 white paper, Bitcoin's anonymous inventor, Satoshi, outlined a vision for electronic cash that changes hands directly from person to person, peer to peer, under the control of no financial institution. It was two fingers to profit-hungry Wall Street. Yet the ETFs will be issued by some of the largest financial institutions in the States, nor do investors own or keep any of the actual Bitcoin. Preach. They're buying a representation, an IOU. ETF investors may stand to benefit from the financial upside, but will not attain all the benefits that Satoshi envisioned. That's right. The true ownership of Bitcoin entails direct possession. Keep that in mind. Remove your crypto off the exchanges. Now, there are some instances clearly where, for example, maybe you own 401k and you don't have the opportunity to invest directly into Bitcoin, the underlying asset, and self-custody it. So your only option may be to use an ETF. This would be an example where it may be worthy to purchase the ETF, but you got to understand you don't really own or hold the underlying asset. So in the weeks after the launch, hundreds of millions of dollars are expected to flood into the ETFs. I think on the first day or first 2 days, there was roughly $4.5 billion. Correct me if I'm wrong. Now, the ETFs will have a mosquito effect, says Max Keiser, who advises the government of El Salvador on the Bitcoin policy, carrying the mind virus of Bitcoin far and wide. The attitude of crypto businesses, particularly those that support the ETFs with services, is that an increase in the profile and mainstream acceptance of crypto in whatever form will be beneficial to the long-term health of the industry after the long series of reputational setbacks. Quoting Marshall Beard, ETFs are just a form of distribution, says the chief strategy officer of Gemini, which we know is owned by the Winklevoss twins. And although investing in Bitcoin through an ETF is not functionally identical to storing one's own Bitcoin, he says, the new funds will cater to an underserved demographic for whom ease of access is the priority. It is not necessarily that one model is better than the other. It's just different. I'll reword that. Yes, self-custody is far superior to the other form because you actually own and control the asset, which is unconfiscatable. Self-custody is unconfiscatable. Want to know what's confiscatable? Bitcoin ETFs. They can basically Biden can pen a letter to Coinbase and say, in the name of national security and protect the integrity of the dollar, we need to seize all the Bitcoin in the name of national security. See the Patriot Act. Anything is possible. So if you trust your government, then it shouldn't be a concern. If you distrust your government and you don't know what they're capable of and you don't want to find out, then self-custody is the clear solution, in JV's humble opinion. What do you guys think? A diversification of parties with the stake in the crypto industry need not compromise the objectives of the early adopters, says Brett Tape Hall, head investor service at Coinbase, another crypto exchange partnering with the ETF issuers. He says, I believe they will coexist in harmony with one another. And let's not forget, Coinbase is named the custodian for BlackRock, the world's largest asset manager, and many of their. So Coinbase is going to be one of the largest hodlers of Bitcoin on the planet thanks to these ETFs. Now, there are potential practical implications of a split in the way people choose to interact with Bitcoin, though. One possible quirk, says Samson Mao, CEO of Bitcoin-centric technology firm Jan3, could be a divergence in the price of Bitcoin held by financial institutions and the Bitcoin that changes hands peer-to-peer. So there you have it, my crypto fam. Another thing I want to throw out there, I hope there's transparency with these Bitcoin ETFs and that there is some way that we can monitor how much Bitcoin, for example, Coinbase, whoever the custodian is, for the asset manager to make sure they're not selling more than what they're holding. Because we don't want what happens in futures markets and derivatives to happen to Bitcoin. Because in the precious metal markets, Max broke this down one time, having a lot of insights, 40 years as an insider in financial markets. He said for every ounce of silver being traded, there's 40 ounces worth of fake silver derivatives being traded. This is how they manipulate the markets. This is why companies like JP Morgan Chase have been fined billions of dollars for spoofing precious metal markets to suppress the price. Do you think they'll do the same thing with Bitcoin? Let me know your honest thoughts. And do you honestly feel that the powers that be will eventually confiscate all the Bitcoin ETF BTC? Do you think this is the master plan?